Welcome back to the Realtor Diaries Podcast. I'm Kim Jacobi with the Jacobi team of Century 21, and with me is Elijah McGowan, also with the Jacobi team.
If you would like your story featured on our wonderful podcast, you can submit it to therealtordiaries@gmail.com. That is therealtordiaries@gmail.com. Don't forget to like and subscribe.
Yeah, and we really do appreciate if you subscribe to our channel because that helps us get the word out about our podcast.
Today's topic is about insurance.
Yeah.
And I actually don't have as much experience with it as you do, probably.
Homeowners insurance specifically.
Yeah.
Covering for fire, natural disasters, things like that.
Yep. I've dealt with renter's insurance, but never had to claim anything. So
yeah.
That's lucky. But for homeowners specifically, the only story I really have is that in 2024, my mom was dropped from her homeowner's insurance after, I was in third grade when we got our home and probably had the same carrier the whole time.
Do you know which carrier she had that dropped her?
I don't. Not off the top of my head, unfortunately.
They just dropped her. Did they give her a reason?
Probably high fire zone, like she became zoned high fire.
Oh, really?
But the neighborhood has never had a fire disaster. There is one scare we had where, this is in Ukiah, California, by the way. There was a fire in Willits off of the 101 that was really big, and it spread along the Highway 20.
Mm-hmm.
And you can probably still see the devastation to this day. It's pretty crazy.
Yeah.
That was pretty bad, but we didn't leave for that one. And right after the park fire, same year, there was a fire across the Russian River from where we lived.
Last year.
No, this was closer to the park fire. Not the park fire, the campfire.
Oh, okay.
Sorry.
The park fire was last year.
I know, that was very recently. No, the campfire.
The campfire, 2018.
It was closer to Hopland, a little further south, and a little ways away, but they weren't sure where the wind was going to shift.
Oh.
And so my mom was like, okay, we're all packing up and we're leaving town for this. And so we all left. Yeah. It was like, if the wind shifts the wrong way, our home won't be here.
Yeah.
But anyway, that's all to say. She was dropped from her insurance despite, there were dangers that things would happen, but nothing had happened really in our community in years, if not decades.
So you're saying you think that when Cal Fire remapped California,
mm-hmm.
that Ukiah, specifically that neighborhood, is now a high or very high zone?
I'm almost certain. And that community where my mom lives, we try as a community really hard to weed eat, because there's tons of the English grass everywhere that dries out every summer. And down the hill, people have tractors, and they have huge fields. They're just getting all the grass down.
Yeah.
And I remember going down there as a kid with my weed eater and my glasses and helping out.
Oh, that's awesome.
And we've always kept things really tame and good because we don't want our houses to burn down.
Yeah.
And despite that, a lot of people in the neighborhood got dropped, including my mom.
Crazy. Yeah. I had a neighbor. So I live in West Chico, just on the outskirts. We live in the valley.
Mm-hmm.
It's not a high fire zone at all. But one of my neighbors got dropped recently because their insurance company sent a drone over their house.
What?
And determined that they had too many things in their yard, wood pile, and
really
they had a project car, and yeah.
They're just living their life. And then their insurance company says,
the insurance company sent a drone. And I think, there's got to be rules. The insurance company, I think, should give you a 30-day heads up. Hey, I'm sending a drone over in 30 days.
Yeah.
Over your house.
To invade your privacy.
I know.
That's a little,
it seems crazy to me. I don't know.
We're not talking about drone law, but that seems a little.
I know, right?
A little weird.
So, check your policies. Maybe there's something in there that says they have the right to come and check on your property at any time. Yeah. Or if they have to give you a 30-day notice. But yeah, so I have a story that directly relates to our guest that we're going to have here in a few minutes. But I think it was, I should have looked up what year I helped this client, but it was after the campfire. So I think it was 2021 when I helped this lady. She had actually lost her husband, and she had 2 kids. And they lost their home in the campfire.
Yep.
And I think she lost her husband shortly after the campfire, and for completely unrelated, reason. But I had been recommended to her from a friend to help her find a house.
Yeah.
And she was renting at the time. And she said that she'd received some money from her insurance company, but that she was working with an advocate and she was expecting to receive more. So then we kind of had this budget, fingers crossed, right?
Oh, okay. Yeah.
So we looked for a while. I think it took us 6 months to 9 months to find a house that she wanted.
Mm-hmm.
And for our offer to get accepted, because she did have an extra contingency written in to the offer that said, her offer, it was going to be contingent on her insurance company from, her previous home to agree to paying for this house, to agree that this house.
Oh, so did she have to bring any money to the table?
She did.
At the end? Okay.
She did. But majority of it was from the insurance.
Absolutely.
Yeah. But she was able, because of her advocate's work for her, she was able to get a house that needed some upgrades. Like it needed a new roof, a new heating and air. The kitchen was dated and closed off, and she was able to put her dream kitchen in.
Oh, that's awesome.
And she even got to update the master bathroom a little bit. And she is just happy, completely happy now.
That's awesome.
She had been through so much years. Like you think 2018, 19, 20, 21. Took her 4 years to get settled again.
Yep. And finally be able to move forward.
Yeah. So it was a new experience for me working as a realtor with this. Because, we're used to working with the lender and the title and escrow officer. And then, of course, the other agent on the other side.
Yeah.
And then sometimes we talk to insurance people as our buyers are trying to find insurance to cover.
It's common to call someone for a quote.
Yeah.
Similar. Yeah.
Or text them,
Yeah.
But this was an insurance advocate. And so I think I learned a lot. And so I'm really excited to have him on as our guest today.
Yeah.
And hopefully you'll learn a lot. Prior to working with this client, didn't even know this existed. And I think it's a really important thing to get the word out.
I know. I hope you guys enjoy learning about it as much as I did.
Yeah. All right. We'd like to welcome our guest, Gabriel Martinez with Calvary Disaster Advocates. He's been with them for 4 years. And something that not everybody knows about him, he loves to golf. And his most recent golfing excursion was to Wailea. And he did the Emerald course.
Yes.
So very cool. Thanks for being on our podcast.
Yeah, thank you for having me. I really appreciate it.
I know. We met once before when we were recording a segment for our first episode of this season. And we've been wanting to have you on ever since.
Yeah.
So we decided to hold that clip until we got to see you this time.
Ah, beautiful. Well, I appreciate it. And it's great to be able to be here with you guys and discuss the very unique and interesting field that I work in.
Because right now the people watching and listening, they have no idea what you do. So why don't you start by giving us a general brief overview about your role as an insurance advocate? So exactly what do you do to help homeowners, especially after devastating events like fire? And how does your involvement typically change the outcome for them? So what do you do?
So I am licensed by the Department of Insurance to be a public adjuster. So there are different types of adjusters that are out there. A lot of them work for insurance carriers, but we work for the policyholder. And so in doing that, what we specialize in is helping people after they've experienced a fire loss, mainly disasters. So there are total loss fire disasters, which obviously we're no stranger to in this area.
Yeah.
We've had one of the hugest losses ever recorded in the campfire. And, nearly 500,000 acres burned in the park fire just a year ago.
That was crazy.
Yeah.
Crazy.
Not as many homes in the park fire, a lot more land, but a lot of devastation to our beautiful state. And so it's something that a lot of people had to deal with. And I was living in Paradise at the time of the campfire. And so the home I was living in burned. And then the home I grew up in, my mother and father's home, burned as well. So I got a taste of it before I even knew what a public adjuster was.
Yeah, I was going to say, you must have started in the field after that.
I did.
Situation.
Yeah. I started the field in finding out about California Disaster Advocates, who has the same CEO as Calvary Disaster Advocates.
Okay.
And I brought my parents there. And after, kind of asking a bunch of questions, he contacted me soon after bringing my parents there and asked me if I wanted to job. And so that's how I got into the field. And awesome. They've kind of sponsored my way through the licensing and a lot of support, great company to work for. And I'm here today sitting as vice president of Calvary Disaster Advocates.
Very cool.
That's amazing.
So great industry to be in because of the difference that we can make.
Yeah.
And so to get back to kind of your question, what we do, obviously, with fire loss, we help people properly document and claim proceeds out of their insurance policy. People, when they experience fire loss and total loss, are in disarray, confusion, sadness, madness.
They're not thinking clearly.
No, and to sit down and try and decipher an insurance policy can be, anywhere between 30 to 120 pages, and to try to understand endorsements in there that change. Yeah. And then that coupled with insurance code and regulation here in the state of California, which might supersede, well, it does supersede the policy, but having to learn that and then roll it all in together and then properly claim, it's very difficult. So what we do is we help people properly document their loss. And then we properly negotiate based upon insurance codes and regulations here in the state of California. So then that way that opens the door to, them receiving payment. And so it's a long process. One of the coverages that we help people with is their inventory. And their inventories can be anywhere between 2,000 to upwards of 5,000 items.
Wow.
So those items.
Yeah.
Individual items. When you think about all the things that you have in your home,
especially you live there for lifetimes.
Yeah. We have people who've been paying premiums, 30, 40 years, never made a claim. And then all of a sudden this happens and they get like a small advance, from their insurance company. And they say, hey, make a list. They make a list. They don't remember anything. Right. On a good day, they write down 500 to 700 items, which is light. They submit that. And then the insurance company will take that list and then they will give it generic items. They'll, for the whole list, make everything coverage and then depreciate it. And in most cases, that list that they turn in is less valuable than the advance that they've given them.
Wow.
And in those cases, a lot of people think, well, do I owe money? And as if they're doing a solid, they will communicate, no, you can keep the advance. And so we've helped a lot of policyholders where we help them make an inventory, we exceed the advance, and we help claim. But then that's a battle. Nothing's easy.
Yeah.
So if you can just think about it, if you've never claimed before, trying to navigate that when we are skilled and know, it's not easy for us. It's even more difficult for a policyholder.
And so without you, is it like the onus is on the policyholder to do everything correctly?
Without us?
Yeah.
Oh, absolutely. I mean, that's what they need to do. But it's difficult for them to do it. And unfortunately, I just think it has to do with the way the adjusters or independent adjusters are trained to handle the claims for the carrier, because the carrier is their principal.
Right.
So, they are supposed to, by the provisions of the policy, pay the claim.
Yeah.
But there's certain things that a policyholder is just kind of unable to do. For instance, when they lose their home, insurance carrier will do a replacement cost estimate for the house. And then people look at that like, there's no way, I can't rebuild my house for this amount.
Yeah.
And then they'll go talk to their contractor,
Yeah.
and say, hey, can you give me an estimate? And then they'll submit that. And it's like, local pricing, and what it would cost to rebuild, something of equivalent construction. And insurance carrier wants it itemized. So they want it itemized, like down to the screw. So, and that's something that no general contractor does. They don't use Xactimate, and that's software that's utilized. That's what we use. So we help people reset that measure of indemnity. And so the measure of indemnity is what it would cost to replace the thing lost. And that would be obviously the replacement cost estimate for the home. Mm-hmm. But also, what is applicable now through insurance code 2051.5 is building code upgrade is supposed to be applied to that.
Really? Okay.
Yes. So it would add to it. So any building code upgrades you would have to adhere to should add to that replacement cost estimate, thus, raising the pool of money you have to either rebuild or replace elsewhere. You can buy something else, but you're not going to be able to get paid more than what that measure of indemnity is set at.
I actually have a question about that. So it's kind of an assumption and a question. So kind of my assumption is that when people have a loss of any type, like earthquake, flood, or fire, their goal is kind of just to rebuild what they had. That's kind of my assumption.
Yes.
My question is, like, besides like that main payout for replacing the structure that was lost, is there anything that insurance companies miss?
You mentioned inventory.
Yeah, inventory.
Like what else? What other categories do you help advocate?
Yeah, well, there's 4 coverages: A, B, C, and D. Okay. So A is the dwelling, B is like detached structures, C is the personal property, and D is your loss of use or additional living expenses.
Okay.
So obviously I've already discussed A and C. B is kind of runs along the same lines as A, in that they're going to do a replacement cost estimate for what it would cost. Mm-hmm. Then you have other, like they're called additional coverages, which are like trees, plants, and shrubs, which is typically 5% of the coverage A limit.
Oh, okay.
And so what I would say, they don't necessarily, we see them miss things. We see the estimates done by carriers where they actually miss items that the home actually had. Mm-hmm. So, I mean, we've seen, tile flooring without any mortar, grout.
Because there's that size.
Yeah. I mean, from the carrier, it's like someone just dropped, tiles down on the floor and called it good.
Yeah.
So all those other items within that estimate have value to that. Right. And so we see a lot of cutting corners. And I would say that is probably the most prevalent thing that they miss. And then personal property, making items generic, and then not properly, applying the condition of the item, just calling everything average, because it's based on age, condition, and life of an item. So the age, if it's within a year, it's new, or above average condition would be the next, and then it's average, and then it's below average. And so that's how they miss the proper measure, is by not properly applying the item.
That is interesting, because they get so you have to count every screw, and then in their report they didn't count every screw.
Now, I had a question. So you were talking about how you have that computer program. What was it called again?
Xactimate. We use Xactimate exact content.
So let's say I have a home insurance policy that puts my replacement, or my what is that category called? A again? Replacement cost.
Your replacement cost for your house.
Yeah. Rebuild cost. Let's say that it was maxed out at $300,000. But let's say Xactimate said $400,000. Could you get the homeowner for $400,000, or because their policy was maxed at $300,000?
I'm actually really glad that you bring that up, because when you have your insurance policy, if you were to go home and look at it now, you would see your declarations page.
Yeah.
And you would see the A, B, C, and D. Unless you have State Farm, because they run a little different. But it's still kind of the same concept. It's still the same coverages. They just have coverage A, dwelling extension, which is the B, and then they go to C, they go to B for personal property.
Oh, okay.
And so,
Slightly different.
Yeah, it is different. But when you look at your deck page, you'll see your coverages A, B, C, and D, and you'll see that $300,000 limit that you spoke of. And you're like, oh, well, they paid me $300,000. Well, and these people will go brag about their insurance company, how great they were. They paid me everything, but they have no idea that there's endorsements in there that trigger additional monies. So oftentimes, State Farm will have 20% additional. And then you'll see other carriers that have 25%, 50%. And in some cases, if it's a state of emergency, fire disaster, there are carriers out there that go to 100%. So you get like double coverage.
I had no idea.
So that's additional coverages that are available to you if the base limit is not enough to.
Is that fine print within your policy?
Yeah, that would be under an endorsement. Sometimes it's named on there on the declarations page. Okay. You might see it, but oftentimes it's an endorsement in there. And then other additional coverages or code upgrade. It's typically 10% of coverage A. So it would be $30,000 in the case that you spoke of earlier. And then you have your additional coverages like trees, plants, and shrubs.
Right.
All these other coverages. And, insurance carriers are very good at smoke screening. And making payouts look a little bigger than they are when they're usually using additional coverages. But, we hold them accountable.
That's good.
Okay.
So I actually had met you because of a client. We won't name her name because I didn't get her permission, but she had lost her home in a fire and was using me as her realtor to buy a house, and she wanted to do upgrades and things like that. And she had hired you to help her as an advocate. And I was amazed at the process. That's kind of how I even learned that advocates for the policyholders even existed, or adjusters for policyholders even existed.
Yeah.
And so that was a success story.
That
definitely.
Was nearly $250,000 procured. I think it was a little over $225,000 of new money procured.
That's awesome. So above and beyond what originally her insurance company.
Oh yeah, this is way after. Yeah. Oh. They didn't pay. They weren't properly paying her for her living expenses. And so, I was literally calling. I physically went to the Elks Lodge because they parked an RV there and they paid to have it there. I contacted another one because, they had another RV because people are always like back and forth. Maybe they have jobs in the area. Maybe they're all over the place after a fire disaster. And so I was able to properly document her loss and got like $62,000 under that coverage.
That's awesome.
And then obviously under the dwelling where you came in, we were successful there. And so the insurance carrier was Farmer in this case, and it really just comes down to how much you spend. And so then I advised her to locate a property that was going to be suitable for her and her family, and she found one. And then she entered into a contract with a general contractor, which added to the amount spent on replacement. And so we claimed that full amount based upon the amount spent for the upgrades and the amount spent on the home. And then we're successfully able to get her policy limits by way of that. And that was, was that did we finalize that in spring of 23?
Yeah. How long of a process
was
that?
Spring of 23.
I started working with
her in 2021.
Yeah.
There's claims that I've worked on for, it's going to take years.
Yeah. And you had said that usually, so like if let's say a disaster happened a month ago, when do you usually enter the picture with people?
We can enter the picture anywhere between soon after the loss or a year and up to 4 or 5 years. And so it just really depends on the insurance company. But typically we enter after the loss.
After they've already received some money.
Yes. Yeah, that's correct. And we like to kind of audit what the insurance company has done. Yeah. And a lot of times they make mistakes. Upon sending our advice or representation, once in a while we'll get checks. We call it and I won't say the word money. Because we send AOR and they send a check because they know that we're going to find the mistake that they had made. And then a lot of times when we see the way they paid, just like a few weeks ago, just after receiving deposits on a new claim, a park fire claim, I had analyzed what they had paid on personal property because insurance carriers are required to give a 30% advance of coverage A or coverage C, which coverage A is dwelling, C is personal.
So that's why you get like the
so 30%. And so a lot of the carriers will see them do like 30% of C, which personal property coverage is always less than the dwelling.
Quite a bit less.
And so we dropped something that morning and sent it off and asked for 28, the 28K, the difference. And we were going to help these people do an inventory. But then they ended up sending 57 because they said, we offered a 50% advance, but he didn't want to take it. And I said, okay, great, we will. Yeah. And we're still going to do an inventory. But when we talked to our client, they made him feel as if he accepted that 50% advance, that was all he was going to get.
Wow.
And so if you received an advance, remember, you can still submit an inventory. Doesn't mean you agreed to that amount.
That's very good to know.
I probably would think that too. Like, they're like, here's the check for this. You're like, I guess that's all I get.
Yeah.
Well, I mean, Elijah and I were talking about it before our podcast recording today. And it was like, you do this every day for your job. And so you're an expert. But if I, as a homeowner, have a loss due to a tragedy like a fire, this is a once in a lifetime experience for me. I know nothing.
Yeah.
And so, I don't know all the ins and outs, all the fine print. And I think especially with moving forward, the way the insurance industry is now in California, I think advocates like you are going to become essential for people's survival, to be able to continue living in California.
Yeah.
Rebuilding and staying where they are in their hometown.
Yeah. I kind of look at what we do as like a local stimulus.
Yes.
Because when we come in and we're helping people procure, 5 and 6 figure checks that they never would have had, that either they fought hard to get and were not successful, or I can't tell you how many times there is this, they had no idea.
Yeah.
They had no idea that this money was available.
Right.
About a year ago, procured a $363,000 payment for someone. And when I called to tell him that we had successfessly got it,
it's a lot of money.
He's like, well, I sure am glad I took that call.
He just had to get it.
Yeah. So, he's like, I had no idea.
Yeah.
Recent Lahaina fire. I mean, this is a UCLA engineering program grad, ran for Senate out in Lahaina, smart.
Yes.
And, this is before she had hired us. And I, asked, here, send me these documents for me to analyze. And so then I reviewed them, and she got on the phone. She's like, oh yeah, I'm interested to see what you say because I know they paid me everything. And I was like, no, they didn't. I had this endorsement. And so she missed $185,000.
Oh my God.
On her
and
she plus 60 in code.
She thought she knew she had it all.
Well, she probably was one of the rare ones that actually read her policy.
Yeah.
Yeah. And so she just didn't catch the endorsement and know to refer to it. And, and this is, I can't tell you how many times policyholders say this, but she said, why didn't they tell me?
Oh, yeah.
And so it's like, I wish they would. I wish they would be held accountable, but that's why we're here.
Yeah.
And, we'll do that.
What can they do though? Like before the fire happens, like they aren't really expected to be or expecting to be an expert in insurance. What can they do?
Yeah. What are some steps that homeowners can take today before the fire?
Yeah. Well, I would say this regarding your personal property, make sure to record everything you have.
With video?
Yes.
Yeah.
Record it with video. I mean, you could make an inventory and then, put it in the cloud and store it, but a video, and make sure to save that video, because I can't tell you how many times we submitted inventory and then the insurance carriers asking us questions about specific items. If we had a photograph of the item in that house, then there's no arguing. You got to pay it.
Yeah. So like once a year, just walk through, video your whole property, really, right? Yeah. The outbuildings,
everything,
the trees,
everything.
Yeah.
Everything that would fall out, if everything was flipped over and the roof was not.
Yeah.
Anything that would fall out, anything that's affixed is going to be part of the dwelling.
Okay.
And then with respect to the dwelling, they should talk to their agent. Their insurance agent is supposed to adhere to California Insurance Regulation 2695.183, which has the standards that not only they need to meet when inputting the data of the home that's going to be insured, but also to make sure that on an annual basis that, it's proper. And so I've seen a lot of scenarios where people end up being underinsured.
Yeah.
Or, if a broker has mishandled, providing insurance, they're held to a higher standard, as you probably are well aware, working in this industry. And so that they can also be held accountable. We are holding some brokers accountable for, just dismay on policy or loss.
A lot of homeowners are wary right now of even making a peep to their home insurance because they're afraid of getting dropped.
Oh,
yeah.
It's like, I feel like we're underinsured, but if I call and I want to raise some of my limits, are they going to drop me? Are there any laws to protect us from that?
Yes, there are. Insurance carriers are, and these I'm not well versed. I'm very well versed in the laws or insurance code and regulations that, insurance carriers are supposed to adhere to.
Yeah.
When it comes to people buying their insurance policy and, what that looks like, I don't know a lot, but there are. And I mentioned 2695.183 is a standard because we see under insurance all the time because people are not properly insured. But if someone goes into, have their, agent reevaluate, their coverages, let's remember these are money-making institutions.
Yeah.
They raise the limits, the premiums go up.
That's right.
I don't believe that they're gonna, they are sitting in a great position.
Yeah.
Insurance carriers, they are kicking back with their feet up on the desk and collecting premiums. So just to give you an idea, I don't have the figures for 24, but 23 insurance carriers collected over $350 billion in the state of California.
B as in boy.
B as in boy.
Interesting.
So when people think that, our insurance companies can go bankrupt,
right,
and all this stuff, I mean, especially if there's culpability like there was with the Camp Fire, and it looks like maybe Edison's, California, also Lahaina, Hawaiian Electric is held accountable. Insurance carriers have what's called subrogation. So they can go after a third party. So at the Camp Fire, insurance carriers got paid $19 billion before any of the claimants from the Fire Victims Trust got $1.
Really?
Yes. And then insurance carriers also have what's called reinsurance.
Right.
So then they, get money back there. And then what do? They raise rates. So I think that in the short run, it may cost them more, but it's my, and I don't have facts on this, but I believe that in the long run, they're in a far better place in that fire disaster in which there was culpability will get them there.
Okay.
That's very interesting.
Yeah, they're fine.
Yeah, I mean, that's the gist of it. They'll be okay.
Well, I mean, I think that there's a lot of people out there who probably have questions, follow-up questions. Is it okay if we share your contact information? So we'll put that on the video. Make sure to give Gabriel a call or shoot him an email if you want to talk to him.
Yes.
And we thank you for being on our podcast today.
Yeah, thank you so much for having me. And if I may speak to the people, I'd like to let you know that, you have a free consultation. So we'll come in, we'll look at your documents, and we'll analyze and see what your insurance carrier did and see how we can communicate, how we can help you. And then also we work on a contingency, meaning you could hire us and we will not ask for $1 to be paid until we procure you money.
That's awesome.
Thank you.
Yeah. Thank you so much.
And now it's time for the news. There's tons of stats and information out there about insurance. I'm going to start with some stuff that we've pulled up. So since 2018, 34,000 structures have been destroyed. And Kim, will you remind me, is that fire or is that?
Yes.
Okay.
Fire in California.
Yes.
34,000 structures.
Yep. This is California specifically. For the Camp Fire, as of 2019, $11.4 billion in claims. And the LA fire, which happened this year, 2025, $12.1 billion in claims.
Have been paid out so far.
Yes.
With probably 20 billion more estimated.
Yep. Tens of billions.
Yeah.
And continuing.
Yeah.
And those are just like two of the massive fires in the last 10 years, 7 years. But I mean, even Park Fire last year, Hawaii had a fire that Gabe was talking about.
Yeah.
Insurance does pay money out. They do.
Although one thing that our guest told us off camera that I feel compelled to say right now
Yes.
is that this is a lot of money, billions of dollars the insurance companies are paying out just for these incidents. But Gabe said that in California alone in 2023, insurance companies received $350 billion of premium payments from their customers.
Yep.
So, we pay monthly for our insurance. A lot of people pay for their homeowners insurance through their mortgage payment. $350 billion in 1 year just in California.
Yep. So it's definitely given us a little bit of a new perspective on some of the stats we're telling you today.
Yeah. Woo. So what are the reasons why there's been an insurance exodus in California? If you weren't aware of this.
That's what we've been hearing is insurance companies pulling out of the state. Basically,
starting around 2022, insurance companies started restricting what they're covering or just pulling out of California altogether. For example, Allstate Insurance, they paused taking on new homeowners. They paused condos. They paused commercial insurance policies in 2022.
They paused commercial and condos. That's interesting.
Yeah. Farmers Insurance Group limited new homeowner coverage. So, for example, like you call up around here, you call up a farmer's agent and you ask them, like, how many new home policies are you allowed this month?
Yes.
And they're like, I got 2 spots left, and that's kind of how it is now.
It's interesting because they want to fill those spots.
Yeah. So insurance companies, it used to be like, oh, I'm buying a house. I need insurance. I'll call around and, pick the cheapest one. But now it's like, we'll call around and see who is even insuring.
Exactly. It's a huge shift.
Yeah. American National announced last year that it would stop offering homeowners insurance. Another one that I've heard of is Travelers. They're not going to renew policies for thousands of properties due to wildfire risk. Chubb, which was, it's an insurance company popular in Southern California.
Okay.
They reduced homeowner coverage significantly since 2021. State Farm, Allstate, Nationwide, all of these big names, they have made significant restrictions or stopped writing altogether. And they say the primary reasons why they're doing this, insurance companies, are obviously because of the escalating climate risks, all the fires that we've had in the last 10 years.
Yeah.
Also regulatory challenges. For example, the state of California has historically prevented insurers or insurance companies from raising rates quickly enough to keep pace with their increasing liabilities. And then insurance companies say that they're restricting insurance or pulling out because of skyrocketing reinsurance costs. So insurance companies have insurance, right? So,
which is interesting. It seems kind of a Gordian knot.
I know. Well, I guess it's to protect them from let's say like in 2018, the town of Paradise burned down.
Yeah.
That's a very small region with lots and lots of claims.
Oh,
and so, an insurance company that has insurance for their insurance, what if they don't have the money to pay out all those claims?
Hand. Okay.
Right? So then they can dip into their insurance. And so those costs for those insurance companies to have their insurance has gone up quite a bit.
Yeah. And I mean, that means a few different things for current homeowners. For a lot of people, it means that they've been dropped from their insurance and they need to find new insurance, which can be kind of scary. That your insurance is we're not renewing anymore this year.
Right.
But there's not really many options because, as people pull out, premiums get higher because there's less choice.
Yeah.
And so that's one consequence. There is the California Fair Plan, but when Gabriel was talking about A, B, C, D coverage, Fair Plan is just A.
Just the cost to rebuild.
Yep.
So then you have to get the wraparound.
Yep, the wrap from the insurance company that is writing the Fair Plan for you. And I've even heard amongst the office that people are having to pick and choose how much they cover outbuildings for.
Right.
They're I can only afford this much outbuilding coverage because this is what it reflects in my premium for this year. And that might go up. So it's a fairly complex situation, but at least the Fair Plan is out there as an option.
True. Yeah. Well, and think about people like your mom who got dropped from insurance. When you have a mortgage, it's like a locked in payment.
Yep.
And then she gets dropped and has to get new insurance. What if her new insurance is $300 more a month?
Yeah.
It's
not
all
everyone
of a sudden,
can pay that.
Her house payment goes up $300. That is insane.
That's absolutely insane. And that's kind of what we're seeing happening though. It's non-renewals leading to either less coverage or higher payments, neither of which are ideal for homeowners who are being affected.
Right. And I had attended California Association of Realtors Legislative Day in Sacramento a month or so ago. And obviously the topic that we're talking about today came up. And unfortunately, there is not an answer in the near future for
that's what I've heard too.
For what the solution is going to be.
Yep. But
wah, wah.
I know. Try to have a good insurance agent. And try to already have insurance is kind of the answer, unfortunately.
Well, and I think taking Gabriel's advice of making sure that you do the yearly audit, and taking video of the things that you own, these are all going to be ways you can protect yourself should you have to make a claim.
I know. I just wanted to say on that though, you should do it. It sounds really scary to me because if you go to them and say, hey, my home value has increased or build cost has increased, please reconfirm what's happening. What if they then try to rip me a new one on premiums?
Yeah, they could.
I know. So it can be scary, but it's probably your best recourse to making sure that you're fully covered.
Yeah. You just have to make that decision for yourself or reach out to someone like Gabriel and ask him his advice.
Exactly.
What he thinks the worser of two evils,
Yeah. You just got to make the best decision for you.
Yeah. Well, thank you for catching our podcast this week. We hope you enjoyed it and stay tuned for the next one.
Heck yeah.